Hey everyone, welcome back to Corporate Decoder, where we dig into the financial filings so you don't have to. And today we have a report from Soundcave Technology Incorporated that looks like it might be trying to make some noise, or maybe just a tiny whisper. We are looking at Soundcave Technology Incorporated's quarterly report for the period ending the 30th of September. 2025. This document gives us a peek behind the curtain to see how this company is doing financially. We'll break down the key numbers, look at what management is saying, and try to figure out if this company is on solid ground or just singing in the rain. And hey, before we dive in, if you get value from these deep dives into corporate documents, hit that subscribe button and ring the notification bell so you don't miss out on future analyses. Also, we've got a fantastic community over on Discord where we discuss these filings in real time, so check the link in the description below to join the conversation. Alright, let's get into it. This is a Form 10Q filing, which means it is a quarterly report. Companies use these to update investors on their financial performance and condition. The company we're looking at is Soundcave Technology Incorporated. They are apparently in the business of designing and manufacturing hoodies with embedded sound. Sounds interesting to say the least. Now, let's peek at the balance sheet. This is like a snapshot of what the company owns and owes at a specific point in time. As of the 30th of September 2025, Soundcave Technology reported total assets of just $1,632. That is a pretty small number, folks. And compared to the 31st of December 2024, where their total assets were also just $1,332. It shows very little growth. On the other side of the coin, we see their liabilities. Total current liabilities as of the 30th of September 2025 were $115,120. That is a huge jump from $61,220 at the end of 2024. This means the company owes a lot more money now than it did just a few months ago, and significantly more than what it owns. And this brings us to the stockholders' deficit. This is where things get a bit stark. As of the 30th of September 2025, the total stockholders' deficit was a staggering negative $113,488. This means that if the company were to sell off all its assets, it still wouldn't have enough to pay off its debts, and the shareholders would be out of luck. This number also ballooned from a deficit of negative $59,888 at the end of 2024. This is not a good sign for the owners of the company. Now let's move on to the statement of operations, which shows how much money the company made or lost over a period. For the 3 months ending the 30th of September 2025, Soundcave Technology reported zero revenue. That is right, no sales. And they had operating expenses of $28,784. This resulted in a net loss of $28,784 for just 3 months. When we look at the 9 months ending the 30th of September 2025, the picture doesn't improve. Again, no revenue is reported. Total operating expenses were $53,800, leading to a net loss of $53,800 for this 9-month period. And on a per share basis, the net loss is reported as $0 for both basic and diluted. While technically accurate given the low numbers, this feels a bit like saying you lost $1 when you actually lost 1,000. The weighted average number of shares outstanding is over 10 million, so even a small loss per S-share would be noticeable if there were any profits. This statement of stockholders' deficit really drills down into the changes in equity over time. Looking at the 9 months ended the 30th of September 2024, we see a starting deficit of almost $11,000. By the end of that period, the deficit had grown to nearly $28,600, primarily due to net losses. Now, fast forward to the 9 months ended the 30th of September 2025. The deficit starts at nearly $60,000 at the beginning of the year. By the end of September, it has ballooned to a massive negative $113,488. This huge increase in deficit is largely driven by the net losses incurred during the period. You can see a significant jump in accumulated deficit that really widened the hole the company is in. Interestingly, in the 9 months of 2025, there is a line item showing share issued for cash with a small positive amount alongside it. This suggests they did get some cash from issuing shares, but when you see the corresponding net loss and the growing accumulated deficit, it is clear that any cash raised is being quickly consumed by expenses. In fact, when they issued shares for cash of $200, they also recorded a corresponding net loss of $28,784, highlighting the scale of their operational losses. Let's look at the cash flow statement. This tells us where the cash is coming from and where it is going. For the 9 months ended the 30th of September 2025, the company used $47,208 in operating activities. This means their day-to-day business operations are draining cash away. Where is the cash coming from then? Well, Look at net cash provided by financing activities. In the 9 months of 2025, they had $47,308 from financing. This came from receiving $47,108 from the president and director and $200 from issuing common stock. This strongly suggests the company is relying on its leaders and perhaps some very small stock sales to stay afloat, rather than on any actual business operations. For the same period in 2024, financing provided $17,500, also from the president and director. And despite these infusions of cash, their cash balance at the end of September 2025 was only $1,432. This is just slightly up from $1,332 at the end of 2024. It clearly shows that any money coming in is being spent almost immediately. So, what is SoundCave Technology Incorporated all about? According to the notes, they were incorporated in May 2021 and are in the wearable tech business, specifically designing and manufacturing hoodies with embedded sound. It makes you wonder if they've actually sold any of these yet, given the revenue numbers. This next note, going concern, is usually a flashing red light. The company states that the financial statements are prepared assuming they will continue to operate. However, they admit they have no revenues, incurred losses, and have limited working capital. They anticipate needing additional investment capital. This section pretty much screams that the company's survival is uncertain unless they can get more money. Under the summary of significant accounting policies, they mention that as of the 30th of September 2025, they had $1,432 in cash, which is consistent with our earlier check. They also explain their revenue recognition, which is standard, but with zero revenue to recognize, it doesn't offer much insight. They state that the carrying value of cash approximates its fair value due to its short-term maturity. This is standard practice for cash. Interestingly, they highlight that they have not adopted a stock option plan and have not granted any stock options. This might be a sign that they are very early stage, or perhaps have a very concentrated ownership structure where options are not yet relevant. This note is where we see a lot of the financial activity happening. It details contributions made by the director of the company, specifically Christopher Campbell, who is also a founder. We see him contributing various amounts towards operating expenses throughout 2021, 2022, 2023, and then significantly in 2024 and 2025. For example, in the 3 months ending the 30th of September 2025, he contributed $18,083. In the preceding quarter, it was $18,000. This confirms that the company is heavily reliant on its founder for funding. And even more importantly, the company owes Christopher Campbell a substantial amount of money. As of the 30th of September 2025, they owed him $103,703, up from $56,595 at the end of 2024. This is unsecured and non-interest bearing, meaning he is essentially providing interest. Free loans. This is a classic sign of a company in its early stages or facing financial difficulty, relying on its principals to keep the lights on. In the stockholders' equity section, we see the authorized shares. They have 250 million shares of common stock authorized, and as of the 30th of September 2025, they had 102,540,000 shares issued and outstanding. This is up from 100,000 at the end of 2024. It is noted here that on May 19, 2021, the company issued 10 million common shares to its founder, Christopher Campbell, for services valued at a very low price. Later, in July 2025, they issued an additional 250,000 shares to the founder for services, and in August 2025, another 4,000 shares. This means their founder holds a significant portion of the company's stock. There is also a section on share subscription received, detailing amounts received from various investors in 2022 and early 2023. These are small amounts from multiple investors, suggesting some initial interest but not a massive funding round. The subsequent event section covers activities after the 30th of September 2025. It shows that Christopher Campbell continued to provide working capital in October, November, and December 2025, totaling a significant amount for things like Edgar filing fees, accounting charges, and audit fees. This reinforces that the company remains highly dependent on its founder for any financial resources. Now, let's look at what management itself is saying in the management's discussion and analysis. This is where they explain their financial situation and outlook. Under liquidity and capital resources, they essentially repeat what we saw in the balance sheet. Their cash balance is low, total assets are minimal, and liabilities have significantly increased. They cite an increase in advance and a decrease in financing and operating activity for the asset change, which is quite vague. They also mention the increase in liabilities is due to related parties' payments, which again points to the founder. Their working capital deficit has grown substantially. Regarding results of operations, management confirms the lack of revenue for the 3-month period ending the 30th of September 2025, with operating expenses of $28,784, resulting in a net loss. They also confirm the same for the 9-month period ending the 30th of September 2025, with $53,800 in operating expenses and a net loss. The cash flows section reiterates that operating activities use significant cash. They highlight that financing activities provided cash primarily from the president and director. This is the same story we've seen throughout the report, running on fumes subsidized by the founder. Under trends, they explicitly state, there is no assurance that we will be able to generate cash flow from our operations. They go on to say that it raises substantial doubt that we will be able to continue as a going concern. This is a very direct and serious warning, and the going concern section in the MD&A is even more blunt. They admit to generating no revenues, having a working capital deficit and accumulated deficit. They state that continuation as a going concern depends on continued financial support from shareholders, ability to raise financing, and achieving profitable operations. They conclude by saying these factors raise substantial doubt regarding the company's ability to continue as a going concern. This is about as clear a warning as you can get without the company outright saying it is going out of business. Then we have a very brief section on market risk stating none. This usually means they don't have significant exposure to things like currency fluctuations or interest rate changes, likely because they are not operating at a scale where these risks are material. Under controls and procedures, management states that their disclosure controls and procedures were effective as of the 30th of September 2025. However, they also note that their independent auditors were not required to and have not performed an assessment of their internal controls over financial reporting. This is common for smaller companies and emerging growth companies, but it does mean there is a layer of assurance missing. The risk factors section refers back to a previous filing, their Form S-1, which was declared effective in May 2022. This suggests that the risks they identified back then are still considered relevant, and they're not adding new specific risks in this quarterly report. Companies often do this to avoid repetition, while still ensuring all potential dangers are disclosed. Finally, we look at the exhibits. This section lists the supplementary documents filed with the report, including certifications from their CEO and CFO, which is standard for these filings. Now, let's zoom out and look at the big picture for SoundCave Technology Incorporated. What is the story here? Well, it is a company that is clearly in its very early and perhaps struggling stages. They have a novel product idea, hoodies with embedded sound, but the financial reality presented in this report is concerning. They have virtually no assets, a substantial and growing debt, and are burning through cash with no revenue to show for it. The company's survival seems to hinge almost entirely on continued funding from its founder, Christopher Campbell. He is not only contributing funds but also acting as the primary source of debt financing through non-interest bearing loans. This is a risky position for any company. The repeated statements about substantial doubt regarding their ability to continue as a going concern are the most important takeaway here. It means the auditors and management themselves are warning that the company might not make it. While they have a unique product concept, the execution, at least from a financial standpoint, appears to be severely lacking. Are there any opportunities? Well, if they can somehow crack the market and generate significant sales for their sound, embedding hoodies, they could turn things around. But based on this report, that is a very big if. The path forward looks incredibly challenging. In conclusion, SoundCave Technology Incorporated, as of this September 2025 report, is a company in serious financial straits. They are heavily reliant on their founder, have minimal assets, no revenue, and a growing deficit. The going concern warnings are unmissable. Unless there is a significant shift in their operational or financial strategy, the future looks very uncertain. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.